This video is designed to help you start a sandwich shop business. At the end of the video, you'll find a valuable gift. It's a sandwich shop business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful sandwich shop business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. Most sandwich shops market to consumers who are looking for a fast, convenient, and healthier meal. These consumers may be employees out on their lunch break, parents picking up a meal for their family on their way home, and anyone enjoying a day out who needs a meal on the go. With increased healthier choices, some shops may market specifically to health-conscious consumers. If you're thinking about starting your own sandwich shop, there are a few things you should keep in mind. After coming up with the idea, the next step in starting your business should be to write a business plan. Not only will a bank require you to have a business plan, but multiple studies have shown that a business plan helps increase the odds of starting a successful business. Forming a business entity. A business entity, also referred to as a business structure, refers to how a business is legally organized to operate. There are 4 primary business structures to choose from, which include sole proprietorship, partnership, corporation, and limited liability company, LLC. Each type of entity has its own pros and cons, such as liability exposure, costs, and administrative requirements. When deciding on which business entity is best for a sandwich shop, it normally comes down to the sole proprietorship and limited liability company. A partnership opens the owners up to unnecessary personal liability, because if a partner does something to get the business sued, or runs off with cash from the business, the other partners are personally liable to repay. The corporation can be a good choice to minimize liability risk, because it separates the business assets from the owner's assets. If the corporation is sued or certain business debts can't be paid back, the owners aren't personally responsible to repay them. The downside to the corporation is that it is more complicated than all the other entities, and requires more administration than the LLC. If you plan on raising a lot of investment though, the corporation is usually the better choice. That leaves the sole proprietorship and LLC. The sole proprietorship is the least expensive and easiest entity to start, which is appealing. The downside is that the owner is personally liable should anything happen to the business, which is an important consideration. The LLC offers the ability to operate as a sole proprietorship, with the liability protection of a corporation. Depending on the state, the cost to form an LLC runs from $40 to $500, which is pretty inexpensive for protecting the owners from business-related lawsuits and certain debts. Naming a business. Finding the perfect business name can be challenging. Not only does the name have to resonate with your customers, but it also has to be available to use. Selecting a location. Market research is essential when setting your sandwich shop up for success. Thoroughly scout out a potential location, and look for competing businesses. One of the best ways to increase your shop's chances of success is to open it in an area with minimal competition, but a great need for the shop. Rent costs will depend on a shop's size, location, and available amenities. Finding a space that was previously used as a restaurant can help to minimize renovation expenses. Because sandwich shops offer convenience and speed, it's important to find a shop in a retail location that's easily accessible. This location will carry higher rental costs, but it can bring in walk-in traffic and encourage customers to stop shopping or while on lunch breaks. Licenses and permits. A sandwich shop owner will need to obtain certain business licenses and permits. These permits and licenses can vary based on the state and town where the business is located. In addition to standard business permits, a shop owner will need to obtain a food service license. This license can cost between $100 and $1,000, depending on factors like the state the shop is in, how many seats are within the shop, and how many employees are on staff. Application requirements can vary by state and by county, but almost every license will require that the shop pass regular health department inspections. There are also some general local, state, and federal registrations a sandwich shop may need, such as a local business license, sales tax permit, employer identification number, EIN, and occupancy permit, among others. The next part of the video is not specific to the sandwich shop business. Nevertheless, this knowledge is essential for success in the sandwich shop business, as well as in any other business. Ignore it at your own peril. Operating a successful sandwich shop business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these two extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice, may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, Unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business, must be divided into two parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a sandwich shop business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free sandwich shop business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.